Good morning, everyone. Welcome to the Stock Market Morning Prep video for Wednesday, November 5th. Another quiet session, actually. We've had 3 days of inside ranges coming off of Friday's big gap up after the Central Bank of Japan decided to continue to do some monetary easing. And we've been in a range now, so we are ready to vacate the premises, as we always say. Looking at the 30-minute chart, which I'll show that to you in a moment. Yesterday was very quiet. Dow eked out a small gain. The other several indices, small losses across the board. Very, very quiet. I believe partly due to the midterm elections, the results which we are getting this morning. And then we'll see where we go. We are now into November. We have just about 6 or 7 weeks left of the year of trading. We've got through October. We've rallied extremely hard. Literally that V bottom that I've been discussing in the last several videos. So where do we go from here? Well, in a perfect world, what I'd like to see is I'd like to see this market come in and kind of flag into this moving average. There's the 8 to 20, that 50 right there. So we can get back down to this area here, make that higher low from this previous low from October. Then I think that we have some additional movement and some building up some pressure to the upside where we can make new highs. And, you know, I would not doubt ES 2100, the 2050 at the very least to 2100, 2130, me being the targets for the end of the year. Is that going to happen? No, we don't know that for sure. But the markets are in dire need for a little bit of a rest. We did get it for 3 days, right? We've been up at these elevated levels here. We do have this gap area that should be filled, and let's see what happens. We're up small in the pre-market session, so we're going to take it really light. I'd love to see, again, one more push lower, make that higher low, and then let's see them bid up the markets. And remember, hedge funds had a terrible quarter last quarter, the third quarter, and they are underperforming this year, which they're going to be chasing performance. We also have some inflows that came in this past couple of days, and let's see what happens here, because when you underperform, you have to make up that quarter so you guys can get paid, meaning you guys, meaning the hedge funds. So we'll see what happens here. It's going to be interesting to say the least. Now, we've actually rallied since 2012, aside from the 2009 lows, but literally vertically in a straight line. We've had a few 5% corrections, but nothing really a decent correction where I was looking for a 10 to 15% correction. I would have loved to see that in October, where if that did happen, then I would be very confident in starting to accumulate a lot of positions that have been totally decimated, partly due to, let's say, oil, for instance. A lot of these oil stocks are something to be looking at. EOG, Schlumberger, Halliburton, Baker Hughes, the oil services, the drillers even. Anything related to oil that's been really getting decimated. We're coming into some big support now in oil, which would be the 75, 77 area, give or take. Now, if we do break that on a closing basis, then I think we get a quick flush down to the 70-ish area, low 70, 70, 72. And I think really that's pretty much would be at least a short-term bottom in oil where you can trade that on a consistent basis. So I'm going to be watching that in the coming sessions to see what happens if we get a big flush in oil. So let's take a look at the charts now, and just to show you what we're looking at here. So we have this 3-day consolidation coming off of this big move, right? Now, if you look at the Bollinger Bands, as you know, I'm a big fan of the Bollinger Bands 30-minute. You could see we have now pressure building again coming off of this big move. We bounced up here, and now we are consolidating for 3 days, and that's what happens. Markets tend to trend probably about 30% of the time where we consolidate and sit tight most of the time. And that's where most of the day traders really don't really, they continue to push and push because they're day trading. Technically, that doesn't mean that you have to get into a position just because markets aren't moving. You could see here, right, we vacated the area, boom, we consolidated, we broke down, and now we're consolidating again. Doesn't tell you which way it wants to go, but we are close to, probably safe to say that, you know, if we do pop up, I think it'll get a good run up and then probably look to stabilize again. But I'd love to see this. I would love to see a gap fill into this area here. Maybe not that deep, but somewhere in this area. So we'll just wait and see, though. But pressure is building, as you can see here, guys. A lot of pressure building in here, so uh, get ready to see what price is going to be doing today or tomorrow. Diamonds, nice big move up yesterday. Volume was much better than the last several days prior last week. And you can see very sloppy, big candles. But we're at this two standard deviations on the Bollinger Band, so I would not be looking to buy anything here. I would love to see again a pullback to that 20-day moving average. Okay, let's take a look at the transports. Transports did make new highs again yesterday, and that's really what's if you're a bull, this is what you want to see. This is definitely confirming what this move happened, what this move was. But again, we're way extended. Look at how far away we are from the Bollinger Bands. It's only logical that when you stretch that band, you're going to come back to the mean, and that's what I'm talking about, right around the 20-day here. I would love to see that. And you can see the volume profiles. We're very thin up in here, and that's what happened. We broke above this area, and we just shot right up. And now, let's see if we can come back and test this area back in here. Not even to this 149 area. Maybe get up to this 152 or even 150-ish, and then see if we can regain some momentum to the upside. And then you have the IWMs, which did quite well. It recovered nicely. And we still have some moving averages that are starting to move back up again. We're starting to get that cross. And you see we started to move back lower again here, kind of fill that gap. And that's good. That's a healthy move here, right? Coming off that double top here. Let's see if we can move back down to that 113-ish area, 113.80. Maybe the next couple of days start to sell off a little bit and then start to move higher again. Remember, markets are made to fool the masses. So the main thing that what I'm looking for is, and again, this is just hindsight, I'm just looking for a flag pattern in, get everybody short, and then boom, rip to the upside again. And that's what the markets are made to do, and most of the big boys, that's what they look to do. They try to fake everybody out, put some sell programs out into the market, and then get to this area here. And then once they see a logical area of support, then they start buying the market. And that's what I believe what might be happening in the next several weeks, because hedge funds are underperforming, so they might put some money to work to the downside, put some pressure to the downside for a few days, and look to buy stocks much cheaper, okay, instead of buying them up at these areas. So just remember that. And lastly is the Qs. Qs did very well. Again, technology was the stellar performance of 2014. Let's see if it finishes that way, okay? All right, guys, have a great day. Enjoy the day. Let's see what happens. Again, remember, cash is a position. There's no need to do any trading if there's nothing to do. And if you see the markets in a range, there's really nothing to do unless you're a scalper, okay? Have a great day, everybody. We'll speak to you tomorrow. Take care.